Hey everybody, today's the 4th of April and I wanted to do a real quick video. So we actually just, the equity market's just open and we are actually in this Geronimo ES trade right now. And that's this one here. We bought at the close yesterday. So as equity markets were closing on Monday on the 3rd of April, we ended up buying. And what it does is it'll hold until the futures close about an hour after it gets in. And sometimes it'll hit the target pretty quickly like it did back here on the 28th of March. When that happens, we just take a nice kind of $425 gain and we're good. When it doesn't hit that, then what happens is we end up holding overnight. And right now, this is what happens. So we held overnight, and then in the morning, right now, equity markets open again, and that's when it jumps back in. Or it doesn't jump back in, but it throws out a target. And so that's what you see right here. If I scroll up a bit, you'll see the target there. So that's what we're waiting on to see if it'll hit that or not. Now the Geronimo ES is this algorithm right here. And like I said, it hasn't had any trades recently, just today, yesterday that got in the one and then we're in it still. And then about a week ago, it got into that one. Before that, it really didn't have a lot of trades. In fact, if we look at the charts real quick, just to kind of show you, you'll see that as the market was selling off, and this is back here is kind of February, it really didn't have a lot of trades. What'll happen is when the market is selling off and moving averages are going lower, it won't have that many trades. But if we zoom out and kind of look at what it looks like, kind of a bigger view picture, then you'll kind of see this kind of thing. And so notice how it's really good at getting out of the way of the market when it's going lower. And then when the market stabilizes, begins to rally, it'll jump back in. And if we look at kind of an actual kind of more bull market, which would be kind of way back here, then you kind of see how well this algo will do. Now remember, this is just one algorithm out of 5 that's traded in the Elite Trader. And so in this one, the way that the trading systems work, the Elite Trader, is that, and same with Trader Plus and even, well, not really basic, but with Trader Plus and Elite for sure. The way it works is I combine different algorithms that have different strengths into one system. This algorithm is the one that does the best in kind of a upward, kind of bullish kind of market. And so, because you have to have at least one algorithm to cover that case, and this is that algorithm for us. We've got these other algorithms that do well in kind of bear markets and more sideways markets, and some that are just kind of general purpose, like these day trades. But that's kind of how they work. So this is the kind of bullish, kind of the bull market algo. But remember, it's 1 out of 5 strategies traded in the Elite Trader. So if you sign up with the Elite Trader, you get all 5 of these. Now this algorithm, or the Elite Trader, trades in $35,000 unit sizes. So if somebody started yesterday with 35K, they'd be up about 150 right now on this trade. And if it hits our target, then they'll log a gain of about $400. Now, so we'll see what happens. But if we look at the past few trades that we've had, I did a video on this one. This is the day trade long V1. And it had a great trade on Friday. The V2 had a similar trade. In fact, it was the exact same trade. The reason why it kind of doubles up, though, is that the V2 has the same entry logic. You see it buy at the same time, but it gets out at a different time potentially. And the way it does that is it has a trailing stop and also a target. Now, in this case, the target and the trailing stop were not hit, so that's why it looks pretty much exactly like the V1. And that's okay, because this is a great algorithm. It's a very low-risk algo. It has a very tight stop of $350. And when it's right, it can have these really big days like it had Friday. And this trade, by the way, it was about a $2,000 trade if you didn't see the video. Now, over here, we have the Emerald Long, and this is also traded in the Elite Trader. And this one had a small winning trade on Friday. Not a small one, but a decent winning trade on Friday. But it didn't hold the entire day like the day trade long. And that's okay, because it's looking at different things. And that's part of diversifying, is sometimes you want to be looking at different things so that it kind of smooths out the equity curve. But it did have a losing trade yesterday. That's right up here. Not a big deal, especially considering the gains that we had on Friday and on Friday. And so if we look here, this is the Emerald Short. Now it hasn't had any trades recently, and that's good because the market's been going higher. But this one will go short on occasion, and this is obviously the one that does well in kind of the bear market scenarios. So when you put it all together, they all work independently, but you kind of overlay them on top of each other, and that's what the elite trader is. But let me do the risk disclosure real quick. So keep in mind that past performance is not indicative of future performance. Trading futures and options involves substantial risk of loss. It's not appropriate for all investors. And remember, I'm not a CTA, I'm a third-party developer. We offer the algorithms under what's called a letter of direction. Finally, past performance is not indicative of future performance. So, and like I said, it does involve substantial risk of loss, should be used with risk capital only. All right, so I'll be quiet now. Let's just let it run, see what happens today. Right now, we're still, looks like it's trying to inch up to this target. Hopefully it hits that. And if it does that, then, we'll see what else happens today. But that's really the main trade that I wanted to cover in this video. This is from the Geronimo ES, which is one algorithm traded in the elite trader. Okay, so all I've done now is I've gone back and sped up the video so that we don't have to wait. But notice how big of a sell-off this has been. Notice how the market right now is trading down. It's down about $160 that trade, where it was up about 300 at one point. So but this is still a pretty small swing. I mean, it looks kind of big, but it really isn't that big. But this kind of thing will happen. Now, fortunately, our stop is far enough that it's not going to get hit, and we actually see the market begin to rally here. And as it rallies, it pretty quickly, this must have been some kind of news that was announced, but you see it spike pretty quickly here, and it actually goes up and hits the target right there. And then it decides to kind of pull back a little bit more. And so, but we did hit our target. This was a great trade because we hit our target. And then since then, I've been watching the market, and the market has actually been selling off a decent amount. And so if we hadn't hit our target, we actually would have been stopped out. And so this was actually a great trade. It's doing exactly what this algorithm is designed to do. It jumps in at the close. It looks for some kind of a pop, even some kind of a breakout potentially, and then it'll get out with a pretty tight target, and then it doesn't really matter what happens the rest of the day. And so it did the right thing. This is a great example of how this trade is designed to work. This one does good in up moving markets and also sideways moving because of this kind of thing. It can definitely outperform in sideways moving markets. But again, this is just one strategy out of 5 that's traded in the elite trader. I think that's all I got though. So this was a gain of about $400 per 35K traded. Nothing huge, but a nice little trade. So thank you for watching though, and have a great day. Bye-bye.